the world woke up to a shift in global economics. In a surprising but welcome move, the United States and China have issued a 90-day pause and reduction in tariffs. After years of tension, tariffs, and uncertainty, calm finally returns to global commerce. Geneva served as the unlikely host to this historic moment. Over 48 hours of intense negotiations unfolded behind closed doors. Delegates from both nations worked through the night to finalize terms. The deal centers around one core promise: reduction of tariffs. And not just marginal cuts, massive structural drops in barriers on both sides. American tariffs on Chinese goods will fall from 145% to just 30%. In exchange, China will reduce its tariffs from 125% to 10%. Markets didn't wait to celebrate. Stock futures skyrocketed within hours of the announcement. The S&P 500 futures surged more than 3%. Nasdaq futures and Dow Jones contracts followed closely behind. This was no coincidence. Traders recognized that lower tariffs mean higher margins and better earnings. The futures markets for commodities like soybeans and copper also rallied. As global demand is expected to stabilize, prices are already climbing. Corporate America is breathing easier. Manufacturers and retailers who depend on Chinese imports now expect lower input costs. For the average American consumer, this spells relief. Prices for electronics, furniture, and even clothing may finally begin to dip. Truckloads of goods once delayed at ports will now move faster. Supply chains, long broken by bureaucracy and brinksmanship, can finally repair themselves. For small businesses, it's a green light. Lower costs could mean higher profit margins and more hiring. In Michigan, a tooling company expects to restore its second shift. In California, a wine exporter projects 20% growth. Farms in Iowa and Nebraska prepare to meet renewed Chinese demand. China has agreed to lift restrictions on U.S. agricultural products immediately. Corn, wheat, and soy will flow east again. The U.S. farming sector has long awaited this moment. Wall Street analysts are revising forecasts. The word bullish echoes in investment briefings across the country. Retail investors are entering the market with renewed confidence. Robinhood and Fidelity report a 10% increase in daily trade volume. American tech firms, once battered by Chinese blacklists, now see light. The agreement includes provisional access to Chinese enterprise procurement. Apple and Nvidia stocks spiked in pre-market trading. Semiconductor futures are seeing the biggest gains in over a year. In Washington, leaders from both sides of the aisle applaud the deal. U.S. Treasury Scott Bessent described it as economic diplomacy at its finest. The mood in Beijing is equally upbeat. Premier Greer stated the deal represents a new era of bilateral cooperation. Though temporary, lasting only 90 days for now, the agreement is already making waves. Both countries hope to extend it into a permanent trade framework. During this window, diplomats will meet bi-weekly to monitor compliance. A joint oversight committee is already established in Geneva. Critics caution it's too soon to celebrate. Trade wars have ended before, only to reignite over the next headline. But this deal feels different. It carries the momentum of exhausted economies and cautious optimism. For workers, the benefits could be real. American factories may rehire laid-off employees to fulfill new export demand. For families, lower consumer costs mean stronger household budgets. Inflation relief, real and felt, is on the horizon. Economists estimate a potential GDP increase of 1.3% by year's end. That translates to stronger economic growth without rate hikes. The Federal Reserve is watching closely. Lower inflation and stronger growth may alter their monetary policy outlook. Interest rate futures suggest a pause, not a hike. That's more good news for mortgage seekers and entrepreneurs. College students studying international business are witnessing history. Professors rewrite lectures to include this major pivot in U.S.-China relations. Supply chain students at MIT are modeling scenarios post-agreement. Case studies are being built in real time. At ports in Los Angeles and Long Beach, the sound of cranes returns. Shipments are moving again, with less red tape and more optimism. Texas oil producers see the door reopening. China will lift its crude import quotas by 15%. That's energy stability, not just for America, but for the world. Prices at the pump could reflect that by early summer. The deal includes clauses on intellectual property enforcement. U.S. software companies say they feel more secure already. It also introduces a pilot for carbon transparency in manufacturing. Environmental advocates call it a small step, but a step nonetheless. China commits to increasing American LNG purchases. That's a win for Gulf Coast exporters and American energy workers. On the education front, more student visas will be streamlined. The academic bridge between nations is quietly rebuilding. Airlines prepare for increased trans-Pacific travel. Tourism, a silent economic driver, gets an unexpected boost. Retail brands like Nike and Walmart anticipate lower freight costs. Their stock prices reflect that optimism. Even luxury brands are rejoicing. China's tariffs on American fashion dropped by 75% in Silicon Valley. Venture capital funds re-engage with cross-border ambitions. The tech Cold War just thawed, at least for now. Pension fund managers, often cautious, have started shifting allocations. Emerging market funds are seeing renewed inflows. The ripple effect is global. The Euro Stoxx 50 rose nearly 2% on the news. In South America and Africa, commodity-rich nations celebrate. Demand for raw materials is projected to rise as production restarts. The IMF and World Bank released joint praise for the deal. Global growth forecasts have been modestly adjusted upward. Meanwhile, retail investors post screenshots of green charts on Reddit. Hashtags like #TradePeace and #BullRun2025 trend online. Crypto markets have even reacted positively. Bitcoin saw a brief jump, tied to restored risk appetite. Still, skeptics warn against complacency. They point to past failures in trade enforcement. To address this, the agreement includes real-time auditing provisions. Both nations agree to transparency mechanisms powered by blockchain tech. It's the first international deal to do so, a quiet technological revolution inside a diplomatic one. Even the United Nations weighed in. A statement welcomed the spirit of cooperation in uncertain times. This is the beginning, not the end. Diplomats remind us, trade peace is a process, not a press release. The road ahead may still have hurdles, but after years of conflict, a new chapter is finally turning. The White House press office released a detailed summary. Journalists described it as the most comprehensive U.S.-China trade accord since 2019. China's state broadcaster also led with the story. Citizens across both countries are cautiously hopeful. American labor unions voiced early support. More trade, fewer tariffs, and stronger job protections, one leader said. High school debate teams are already researching the pact. College scholarships may soon focus on this moment. Think tanks in D.C. and Shanghai are hosting emergency panels. Everyone wants to understand what this deal truly means. In boardrooms across America, CFOs are recalculating forecasts. Tariff savings could exceed $20 billion annually. Freight companies are hiring again. A new logistics boom may be underway. Shipping container prices, once astronomical, are softening. Lower transport costs ripple through every industry. The automotive sector is watching closely. Steel tariffs are among those set to fall dramatically. Detroit-based manufacturers may soon increase production. More parts, fewer fees, stronger profits. China has agreed to relax its battery export restrictions. That's a major win for U.S. electric vehicle makers. Tesla, Rivian, and GM stocks surged in after-hours trading. Battery futures jumped alongside them. For the service industry, the benefits are less visible, but real. Consumer confidence is rising, which often leads to more spending. Restaurants, gyms, and entertainment venues benefit from a stronger economy. The ripple effects of trade stretch far beyond ports and warehouses. In rural towns, the news spread via morning radio. More buyers for our beans, one farmer smiled. At truck stops, diesel costs remain a concern. But efficiency improvements may help balance the books. Job postings rose by 6% within 48 hours. LinkedIn reports a spike in cross-border logistics roles. Lawyers specializing in trade law are suddenly in demand. So are interpreters and diplomatic consultants. Universities with China-focused programs are celebrating renewed relevance. Applications are expected to rise next semester. New York City's stock exchanges set fresh records. Trading volume surpassed 2 billion shares by midday. The New York Federal Reserve says they are watching consumer sentiment. Early indicators are trending upward. In Flint, Michigan, a long-idled auto plant is preparing to reopen. Community leaders call it a turning point. China's currency, the yuan, strengthened moderately. The dollar remained stable in response. Global currencies are adjusting. Exchange rate volatility is calming. Welcome news for forex traders. Gold prices dipped slightly as risk appetite returned. That's a typical response in times of trade clarity. Meanwhile, crude oil remains stable. Energy traders expect volume increases, not price spikes. Back in Washington, trade negotiators are preparing for the next round. The 90-day review will be critical. If successful, a 5-year extension is on the table. Both sides are signaling interest. International allies are responding. The EU is watching the pact closely to assess its impact. Japan and South Korea are reviewing their own trade strategies. The Pacific trade dynamic just shifted dramatically. India is preparing for secondary market benefits. They anticipate increased demand for backup manufacturing. Vietnam, too, expects to play a larger role. A rising tide in trade lifts all boats. In Congress, bipartisan support is growing, a rare sign of unity in polarized times. Social media users are surprisingly optimistic. Memes of Tariff Truce 2025 are trending. The Department of Commerce has issued updated import guidelines. New classifications will streamline customs processes. For families saving for college or retirement, this could mean higher returns. Mutual funds with international exposure are rebounding. The Congressional Budget Office is revising forecasts. They now expect a modest reduction in the national deficit due to trade-driven growth. For the millennial investor, it's a wake-up call. Many are rebalancing their portfolios toward global equities. Retirees may benefit as well. Pension fund health is tied to market performance. China's e-commerce giants are also celebrating. Alibaba and JD.com will resume bulk importing of U.S. goods. For American entrepreneurs, this opens the door to a billion-person market. Dropshippers and exporters are taking note. For now, skepticism remains in some circles. Past betrayals have taught hard lessons. But across industries and ideologies, one thing is clear. Trade peace feels possible again. A new generation of traders, diplomats, and citizens are watching. In homes, classrooms, and boardrooms, the conversation continues. Not about war, but about trade. This is the power of diplomacy. Quiet, complex, and transformative. Whether the pact holds beyond 90 days remains to be seen. But its impact is already felt. This agreement is not just ink on paper. It's a signal to the world. Progress is still possible. And for the American people, from farmers to coders, welders to investors, this may be the best news in years. Because when two economic giants shake hands, the whole world exhales. And for the first time in a long time, markets aren't panicking. They're rallying. This was Turning Tides, the U.S.-China Trade Accord. A moment in history, reshaping the future.